Welcome, everybody. I am Gianni DePoce, and I'm really excited for this session today, a collaborative event between Benzinga and Direxion. We're going to be talking about trading the new Trump era, leveraged ETF bets for a changing economy. So, obviously, there's been a major shift in perception in the markets in light of the results in the election. There's been a major mandate for economic growth. And so, what that does is open up a whole slew of new opportunities for traders to capitalize on in the short term. And the beauty about what we're going to discuss today is with these Direxion funds, these leveraged, inverse, bullish, and bearish ETFs. You can make a whole bucket of money in a short period of time, assuming you know how to trade these fine products the right way. So I have built a little bit of a presentation here. I'm going to talk about some of the opportunities that I see with some of Direxion's products here, both on the bull and the bearish side. They've launched some really cool single stock ETFs as well that I think are really exciting given what we've seen in the market over the last couple of years, really, and just a concentration of leadership. Meaning that we've seen just really a handful of stocks dominate the performance in the overall market. That doesn't mean there aren't opportunities elsewhere and there aren't smaller stocks doing well. It just means that a lot of the big performance, a lot of the market moving performance has come from some of these big tech names. So we're going to look at some of those and discuss what opportunities may be there as well, in addition to looking at some of the sectors that we are looking at some nice opportunities with. So let's go ahead and get my presentation up on screen here and we can begin going through that. So like I said, trading the new Trump era leveraged ETF bets for a changing economy. I am Gianni DePoce. I'm a trader and over at Theo Trade, but Benzinga has been good friends of mine for a long time as well. So I'm actually going to start off talking about the semiconductor index today. So a lot of big developments happening in the technology space over the past week. So I'm going to talk about that in just a moment here, but I do want to bring on Eliott Wellenbach really quickly because we're going to be going back and forth a little bit here. Eliott, a good friend of mine over at Direxion. Eliott, how's it going?
Hey, Gianni. Great to see you again. Great to be on. Very excited to be here and talk about some leverage and inverse ETFs and, some different trading, styles and strategies, especially with a lot of the market news that's going on. So yes. Very excited to be here. Gianni, if you don't mind, just quickly before, because you have all the fun slides.
Sure.
If you don't mind, if we can just give a brief high-level education to traders of how these work, and then we'll get right back to the fun stuff. But just want to make sure everybody out there knows how these work quickly. Yeah, and I can cruise past this as your classic disclosure slide. On the next slide is just a brief overview of Direxion, who we are. We're a leveraged ETF company mainly. We founded in 1997. Right now we have about 50 billion in assets under management. Again, mostly in the leverage and inverse space. We're one of the top 20 ETF providers globally. And just on the next slide, just a brief high level of the leverage inverse ETF landscape. Where are the assets at? So as you can see that these are mainly concentrated in triple leverage bull funds. And then, you have your 2X and then across the gamut of your inverse. Quite tellingly from this, there's a lot of bulls out there as the inverse funds do not have as much assets across the leverage and inverse ETF space. But on the next slide, just a little bit high level of what is a leverage inverse ETF. So these are daily, magnified tools for, short-term tactical trading. They're meant to provide on a daily basis, either 2X or 3X leveraged or inverse exposure. So essentially for every dollar you have invested, If you're in a 2x fund, you're going to get, $2 of exposure, 3x fund, $3 of exposure. And just on the next slide here quickly, we have just, why I brought up short term. These are meant for, short term tactical trading. And that's because these funds rebalance daily. And what do I mean by rebalance is that we make sure that every trading day you're starting out with that targeted exposure. So in this scenario, I'm not going to run through this, but, we can, come back to it anytime if there's any questions. But essentially, it's really important to understand that these are short-term trading tools. And on the next slide, it sounds corny, but trend is your friend with these. So this is an example.
Still my line, Eliott.
Yeah, no, I know. I say to our institutional clients that I work with, and it sounds very corny, but it is very true. Trend is your friend here. This is an example of the underlying benchmark, and in orange is up, 11%. Over the course of multiple days, you have a 3x bull and bear fund that track that benchmark, that provide daily 3x exposure. You can see in this overall trending multiple day environment that you're actually outperforming a 3x cumulative return. That's best case scenario. But on the next slide, you can see in a more volatile, non-trending market environment where the underlying benchmark has had less trend, lack of direction, but more volatility because of that daily rebalance and because of leverage. You're actually underperforming in both the bull and bear fund in that scenario. So just again, high level, just on the next slide, these are really short-term trading tools. They're meant for opportunistic trading. We have everything from single inverse all the way up through, triple leverage or triple inverse. This idea of portable alpha, needing less capital down to express a short-term trader conviction. So these are very powerful tools. And now I will hand it back over to Gianni. Just want to make sure we cover the basis before we dive into these things, and now onto the fun stuff with what we're going to talk about going forward.
Great, thanks for that, Eliott. It's so very important to understand how these products work if you're going to use them properly. So there's another saying in the industry. You mentioned the trend is your friend, but there's another one that says know what you own and know how it works, right? So these leveraged ETFs can be very powerful tools, but these are not buy and hold instruments at all. These are short-term tactical trading vehicles that can magnify and amplify your returns if you're on the right side of the market. So let's talk about now some of the tools that a trader can use to take advantage of these types of products. And I'm going to start off by looking at the semiconductor index here. This is the Philadelphia Semiconductor Index. And, a lot of big things happening in the chip space over the past week. You had Google come out and announce their Willow quantum computing chip. Obviously, Google's not a semiconductor stock, but I bring that up to raise the awareness around the innovation taking place still in the tech arena. And, dare I say, Eliott, that AI is already old news in the market. I know that might be a bit heretical to say right now, but I think quantum is something that needs to be looked at and considered seriously, in the opportunities that are in that sector. And I'm going to show you a chart of Google later on. But let's start off with the semiconductor index and just discuss some of the basic tools that we use as traders here. So this is a weekly chart. Now, you don't want to trade these ETFs across a time horizon that's this long. This actually goes back to like the third quarter of 2021. But when you're looking at trends, okay, let's talk about the trend that we see here in the semiconductor index. We see higher highs and higher lows if you follow my laser pointer, okay? Pretty straightforward, pretty simple stuff. Now, trends exist across different time frames. And generally speaking, the general rule is that you're going to get the biggest directional moves, pun intended, in the direction of the longer term trend. Okay, so if you observe a long-term trend, an intermediate term trend, and a short-term trend, you're going to get those bigger moves in the direction of the longest trend. So keep that in mind when you're taking on short-term opportunities. You need to know where the market stands in the long term, because again, we're looking to magnify those returns as much as possible. So in looking at this chart, we see an uptrend in the semiconductor space. And so as a result, my bias as a trader would go towards the triple bull leveraged ETF, the semiconductor one, SOXL. And so that doesn't mean that there won't be opportunities on the inverse side. It just means that you're going to have bigger moves based on probabilities in the direction of the bullish side of the market. So, there are different price patterns you can use. We'll talk about that a little bit. But what you see here is, it's called the triangle, and a lot of times it leads to a continuation of the trend. So, semiconductors actually have not hit a new all-time high since July of this year. And that's something that I would like to see change. I think it will change. I think semiconductors will confirm this bull market that we're seeing in stocks overall. But basically what we need to see here is a break above this trend line for this bullish case to be confirmed in the semiconductor space. Okay. And if that doesn't materialize, then there will be some opportunities on the short end of the market. So, there's some things going on with NVIDIA being probed by the Chinese government. There's a lot of things. It's not all rainbows and butterflies bullish news. But like I said earlier, I am pretty excited about the developments in the quantum space. So, if you're looking to trade this on the bearish side, similar idea. You would look for a break above this trend line that we have here, another triangle formation. So it's important to, not become married to a particular narrative. Stay open-minded, stay nimble, but also recognize where we stand in terms of the longer-term trends. So, Eliott, anything you want to add to what's happening in the semiconductor space?
Yeah, no, definitely. I think you mentioned a few great things in that, NVIDIA is a household name now and but it's not the only one by far, but really has been kind of the darling of Wall Street, if you would say, over the past couple of years. And that being said, we've seen tremendous, inflows into SOXL or triple leverage, this year. Even though, more recently, you haven't seen, really that high, like you mentioned, since July. It's actually our second largest of inflows across our suite of 90 plus ETFs, and actually our largest in assets under management. But what we saw last week, it was the second largest in outflows for that week. Of course, we're looking at short-term, weekly flows time horizon. And last week we saw the SOXS, the triple inverse, as the second largest in inflows. So we like to see that, and that's really showing us a lot of times that when there's a either a short-term rally, or strong rally. When we see, large outflows, that's usually traders taking profits off the table. And then a lot of times we'll see exactly like what we did last week, that rotation into, the opposite side of that trade. So it's, something that, we see, like I mentioned, quite often. And, I think that semis and chips are definitely not going away, but I like your take on quantum computing too.
Yeah, it's going to be interesting to see how that impacts, I guess, the traditional semiconductor sector. So, it's still new. There's still some problems with quantum computing. We're not going to get into all that here today, but it does seem like a new frontier in tech, which does give some nice opportunities. So we'll see if that ties into the semiconductor sector in the not so distant future. I do want to talk about China, obviously. So now a lot of big things happening there. It's a market that has come back to life, so to speak, this year. But here we are looking at a weekly chart going back a couple of years, and you can see for a while you actually saw a downtrend. You saw lower lows and lower highs. Okay, and in addition to the greater magnitude of moves being to the downside, I also want to highlight the amount of time that this market spent dropping. So this is the FTSE China 50 index, which is the index that Direxion's leveraged ETFs track both to the upside and to the downside. But, you had a big pop in this index earlier in the year. It seems that some of the stimulus efforts on behalf of the Chinese government and the People Bank of China is finally paying off. But I've had a bit of a contrarian take on that. I think that a lot of it has to do with actually the Federal Reserve easing, because if you've been following what's been happening in China over the past couple of years, even amidst this downtrend that we've seen that is finally seemingly over, during this downtrend, you had a lot of stimulus efforts that just didn't bear any fruit. And what really changed this year is you had the Fed start cutting rates in September. And a lot of people don't realize, but as traders, we need to understand this, is that the Fed, even though it's not their purpose, for all intents and purposes, they basically are the central bank of the world. It all gravitates around the Fed. So I think that with the Fed easing in September, it's taken some of the pressure off of some of the central banks from around the world. There's not as much of what's called a carry trade flowing into the U.S., at least not as much of an incentive. With rates coming, it's not like you're dealing with as wide of a spread as we had before, because, rates in China are still lower in some ways than the U.S. So I'm excited about what's happened here, because look at what we have is we actually have a great example of a trend change. You can see here that, you were making lower lows and lower highs. And then at the beginning of this year, you finally made a higher low compared to this low in October of 2023. So that was the first, I guess, shot across the pond that we had, that, hey, maybe the situation in China, the worst is behind us. But then you had that rally into mid-year and still no higher high. But then I really started paying attention as a trader over the summer when you had another higher low. And then you had that explosion higher. And what did you do? You took out this high from 2023. You took out this high from 2022. And for all intents and purposes now, you came back down, formed a higher low. It's hard to argue that the bearish trend is still in effect in China. I think now that we see higher highs and higher lows, simply from a trend following standpoint, we should be paying more attention to the bullish side of the market, just in terms of where the bigger moves may be coming from. Again, that doesn't mean that there won't be opportunities to trade on the bearish side. It just means you're probably going to get the bigger swings in the direction of the bullish side. So you also have, go ahead.
Oh, I was just going to say, I completely agree with you on this. Especially the slow reopening, what you're mentioning earlier with China. That was a couple of years ago. There were multiple failures of that slow reopening, and then finally, once Chinese, the economy, kind of their country did reopen, we didn't see that pop at all. And then, in the combination of exactly what you mentioned, the Federal Reserve, lowering rates, but also, that injection, multiple rounds we've seen this year, and injection of stimulus into the Chinese economy from the government, really trying to prop up their, real estate market and overall their economy and their trading. And we also, even this week, there's a large meeting that will end tomorrow, and we'll get some outcome and kind of key insights to one of their last of the year key economic meetings around stimulus. And even with that, I think a lot had to do with that recent downtrend is the concern around what we've discussed of the presidential election and what we've heard quite often, the Trump trade. But it's kind of starting to we've seen a recent pop and for a variety of reasons. But some are viewing as the move to the downside after that was a little bit over, maybe overdone, what's going to happen moving forward.
Great. Yeah. So, and this Chinese market here, the pattern that I'm seeing here is called a rounding bottom. And a lot of times you see these types of formations come around when the trend is starting to change. So we already have that evidence there as well. And then I want to talk about support and resistance, and I'll use the next slide to showcase some support, but this is a really good example of resistance. So, we talk a lot about in economics and in markets, the ideas of supply and demand. And, what I love about using charts to trade is that you can actually visualize supply and demand in real time. And I think the best way to look at those examples are with an understanding of support and resistance. So you can see here that in this market, you had prices rejected here, 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 and you finally broke through it here. But you've had this zone, let's call it between 15,000 and 16,000 on this index, that acted as a resistance zone. Prices rallied up in that area, were rejected back lower. And resistance is simply an area where supply exceeds demand. When supply exceeds demand, prices go down. Okay. Now, the important thing to understand is that when resistance breaks, it becomes support. So we haven't quite broken through resistance just yet, but we've tested it again. And I think we have the opportunity to finally break it. But, you'll see here in this market, you have the China Bull 3X shares, a little bit shorter time horizon. We're only going back to like April in this case, but, you had resistance in this area. And then when resistance breaks, it becomes support. So support is simply the opposite of resistance in that it's an area on a chart where you can visualize demand exceeding supply. So a lot of what we do as traders in using charts is just observing supply and demand in real time, and it's plotted visually. So, you have a bit of a correction here, but again, if we are starting a new bull trend in the Chinese market, I think there's going to be a lot of opportunities to pick up some swing longs, short-term trading opportunities with the yin ETF. And then if that doesn't work out, you have the Yang Bear 3X ETF. And you can see here, you've kind of just been going sideways over the last couple of months, kind of just consolidating those losses. So I don't know if there's anything else you wanted to add to yin and yang here, Eliott, but that's how I'm taking this one. I think there's a little bit more opportunities in yin right now.
Yeah, no, definitely. I mean, just in regards to, flows, I always think it's interesting. Yin, is our, third largest inflows year to date. That did really pick up. I've monitored just our suite of, what's going on and where we're seeing inflows, outflows, and that really didn't pick up and become, top, inflows until, again, around that September timeframe with the, initially the Fed, and then, the, pretty significant injection of stimulus from the Chinese government. And, that kind of area down there where you're talking about with Yang, that's a kind of a great, example of where there's a lack of direction. And, you're kind of, that's an environment where you're going to get whipsawed, especially if you're holding on to that, and why, these are, short-term trading tools.
Awesome. Eliott, we have a question in the chat, so let's go ahead and take a look and see what that is. Can we compare the pros and cons of selling puts against long leveraged ETF? So either buying SOXL versus buying the inverse / short ETF. Well, one thing I can say about that is that, when you're trading options, when you're trading even just on margin, it's a different type of account. So these are all ETFs that you can trade with just a regular cash account. You don't need special options permission. So kind of a way to experiment with leverage without getting into options. The potential for loss on these, if you're on the wrong side of the market, is great. And, you can see your principal erased really, significantly. But, options, if you let them expire worthless, you can lose all of your principal as well. So, it's really a matter of picking your poison, I guess, when it comes to leverage. And it's one of those things that you cannot afford to stay wrong for long. But, there's different option strategies that can help you mitigate your risk, either on the upside or downside. But when it comes to ETFs, this is one of those occasions where you need to use stop losses. You need to know what your risk is defined as, and understand when the market is telling you that, hey, you're not right, or your timing is off, and it's time to try again. So that's how I would respond to that. If you wanted to add any other context, Eliott.
Yeah, no, and I think what you mentioned, just, you're going to need a margin account. If you're doing options, you don't need that with trading leverage and inverse ETFs. Also, financing fees, I can't speak to what they would be for that, but I can speak to ours that, all of our leverage and inverse ETFs are 95 basis points as an expense ratio. Traditionally and has been, that's one of, and usually the least expensive ways to get leverage exposure, as opposed to, a margin account and fees associated with that. And on top of that, with different options, you're going to get a variety of different decay. And with ours, you have the daily rebalance. When you're holding for a longer period of time, with the leverage, you can have a kind of a decaying effect from that. But beyond that, we use total return swaps. So you're getting that total price return of that underlying asset, in that case, SOXL or SOXS on a daily basis. So you're not getting any time decay or anything like that. So it's it's if the person asking the question likes using options and is skilled with that, that's great, and should do as they please with that. With using our leverage inverse ETFs, they're a little bit more straightforward for short-term tactical trading, I would say.
Great. Well, I must say I'm really excited to talk about this next pair of bullish and bearish ETFs. So Direxion has recently launched a couple of ETFs that allow you to trade on the bull and bear side of the crypto market, and it tracks this index here, the Distributed Ledger and Decentralized Payment Index. So I want to be very clear, even though they're tied into the crypto space, it's not Bitcoin, it's not Ethereum. These are stocks that are associated with the blockchain and cryptocurrency sector. And I don't think I really need to get into too much detail here regarding the trend. I think if anyone's been paying attention to the crypto market, you know it's in an uptrend. But we do have some nice examples of support and resistance here that I briefly want to review, because again, I want you to come away with some basic educational tools on how to read charts. So you can see here, if you follow my laser, that there was some resistance in this index, really for a couple of years, and we finally broke through it after the election. We saw Bitcoin rip to new all-time highs, but the stocks associated with cryptocurrencies followed higher. But let's talk about support here, because you'll see here that there was also support in this zone. And when we talk about support and resistance, these are ranges in prices. These aren't hard and fast lines. A lot of times you see them drawn on charts just as singular lines, and that's just really for visual purposes. But I cannot stress enough the importance of using ranges or zones on these prices when looking for support and resistance. You can see here, like in that $3,500 area, let's call it like $3,300, $3,500 area, we saw prices bounce off that a few times in this distributed ledger and decentralized payment index. And that was an area where there was more demand than supply for these for this market related to cryptocurrencies and blockchain. So we bounced off that a couple of times. And another rule that I like to employ, Eliott, is that the more that a market tests a support or resistance level, the more likely it is to eventually break that. So let's take this a step further and look at some opportunities here. We're looking at, I love the names. I love the names. LMBO, Lambo. I mean, the Lambros, the whole meme thing. I think that's very clever. Whoever came up with that, well done.
We have a history of good tickers.
Yeah, that's very good. So, even here, even though this fund's only been around since I think July here, you can see the uptrend in effect, higher highs and higher lows. So again, just from a trend following and support and resistance standpoint, I think you need to have a bias toward the upside here. And you can see there was even a little bit of resistance here in the $24 area. You broke through that, exploded higher, and now you are effectively consolidating or going sideways in what's called a symmetrical triangle. So, when we're talking about trends, here I am talking about uptrends or bull trends and then downtrends or bear trends. I want to also emphasize that there can be pauses in the trend. Okay, trends are not always clean cut in one direction or the other. And that's why I like to say, when in doubt, zoom out. Always know what's happening across a longer time horizon, even if you are a short-term trader, because sometimes the short-term trend can get muddled in choppy price action. And so it helps give you some clarity in terms of what side of the market you want to trade. But, as I see this symmetrical triangle pattern, this to me says that the probabilities favor in time another leg to the upside. But of course, there's a lot of factors at hand. We do have a little bit more regulatory, or I should say, we're going into an environment where there should be more regulatory clarity with the incoming administration on the crypto front. Seems like there's going to be some changes at the SEC, and there's going to be some more regulatory clarity in terms of what crypto is. Is it a security? Is it a commodity? Is it a contract? What is crypto exactly? Believe it or not, the regulators have not been able to come up with a clean-cut definition. But the bear side of this market is wrecked. That's very funny too. I like that. This one's only 1x to the downside, so the Lambos is 2x to the upside, wrecked 1x to the downside. But what I like about this is that there aren't really that many ways for people trading in regular cash accounts to take a downside bet on the crypto space. I mean, if you trade futures, that's one way. Then you can go onto those crypto exchanges, which sometimes have some, questionable, I guess, business practices. We've seen that play out in the past. And so that's why I like, the rect here is that you know what you're getting. You're in a cash account. It's not, not as much counterparty risk, I should say. But, in this case, rect has been suffering, unsurprisingly, given the strength in crypto markets and just the overall blockchain space. And looks like you have a little bit of a rectangle pattern here, which often leads to, continuation of the downside. So yeah, I'm really excited about these funds, Eliott. So anything else you want to add? Feel free.
Yeah, no, definitely. Yeah. And as you mentioned, these are not a direct crypto play because they're not invested in, anything, any Bitcoin or Ether or any other coins, but they are invested, and provide exposure to companies and their business operations that are involved with that. So, you're getting your top holdings: PayPal, MasterCard, NVIDIA, AMD, Coinbase, and excuse me. Definitely. I like that you brought up the 2x and single inverse. So they're not, even though they track the same index, they're different leverage exposures. And we really did that. The single inverse side is definitely more we've seen for as a hedge. So with, I've stressed short-term tactical trading with leverage and inverse. With the single inverse, because you don't have the leverage exposure there, that can be used as more as an intermediate term hedge, or can be used to tactically trade. But it's something that, if like you mentioned, if you're looking to, either, take a, inverse view, or if you have, exposure in that space and you're looking to hedge it out, partially for a period of time, it's a great way to do that, with a single inverse ETF.
Indeed. And, I think there's the lack of regulatory clarity that we've had over the last couple of years has probably held back what could have been in the, blockchain space. And so, I've even been seeing things about the New York Stock Exchange polling members with the idea of, maybe going to 23-hour-a-day trading, which could be.
I did see that, and I forget which exchange popped up in somewhere. I think Texas is looking for to do a 24-hour trading. It's none of the big exchanges. It's new, but it's something that they're trying to push. So it's interesting to see that.
But to that point, this is the type of technology that they would use is blockchain instantaneous settlement. Once upon a time, it used to take 5 days for trades to settle. And I can't imagine. It really just goes to show how much the trading environment has changed, because, even with these types of leveraged products that, we use here at these ETFs, probably back in the day would have been difficult to trade that way, since a lot of times you're holding them for just a couple of days at a time. So, it really is something that has blossomed in the last couple of years in terms of being easily able to trade these types of ETFs. So it's very exciting, I think.
Yeah, no, I completely agree.
Yeah. Okay, let's talk about precious metals here. So I'm looking at the gold miner index. So we've seen gold prices hit new all-time highs. Silver rallied to its highest level since 2012, earlier this year, I believe. Seen a little bit of selling over the last 24 hours in that space. But we're looking at the gold miner index here, a weekly chart. And you can see that trend playing out in the mining stocks as well. So, here we're looking at the actual gold and silver miners. We're not looking at the spot price of gold or silver. But here too, you see higher highs and higher lows, especially after this low here at the beginning of the year. And it was a big rally that we had. It really is only just over the last couple of weeks that we've seen some of the bullish trade unwind in the precious metal space. But you can see how you started to pop above that resistance zone here. You had another resistance zone here in the $1,000 area, and you broke above that finally. You came back down and retested it. And that just goes to show how when resistance breaks, it often becomes support. And it's the same thing when support breaks, it becomes resistance. It's just in this case, we're looking at an index that's in an uptrend, so you're more than likely going to see resistance breaking and becoming support. And we saw that here. So, the big thing that I'm watching for precious metal miners here is if we can take out this high from earlier in this year. If so, we will have confirmation that the trend has been reinforced in favor of the bullish side of the market. And so that should open up some opportunities in some funds like NUGT, Nugget, as I like to call it. And so you can see here, a little bit shorter time horizon going back to March, higher highs and higher lows. Okay. It hasn't been a very clean, steady trend higher. So you can see how, this is a good example of an ETF that you don't want to be holding for the long run, because, you had quite a bit of swings in this, which is good for short-term traders. That's what these products are designed for. And, you had this little bit of a correction, you corrected into this falling wedge. When you break from these patterns, it often means that a reversal is underway. And we have indeed seen a reversal back to the upside, even though today you're seeing a little bit of selling. We did have a nice rally yesterday. And so now the big test is, will we rally back up and form a higher high, or will we rally back up and form a lower high? If we form a lower high, that could be the first step in the establishment of a technical downtrend. And in that situation, dust will probably provide some nice opportunities. So, unsurprisingly, this one has been trending lower throughout most of this year. But you can see how we came into that low in October. And we're approaching a really important moment in this chart from a technical standpoint, because if you make a higher low here, then the bears in the precious metal mining space will have some ground to stand on, or at least attempt to make a stand. But if you take out this low to the downside in dust here, I think you have to be favoring Nugget to the upside. So that's my take on the metal mining space. Eliott, be curious to hear what the fund flows on these ones are.
Yeah, these have been a favorite of traders historically at Direxion. We've had them out well before I was at Direxion. And to be honest, what you mentioned, I thought was great on the Nugget slide of that kind of that range bound and that those short-term windows where, that's months, that's not days right there, but really good pockets of, strong directional upside move, but then followed by, a pullback. And a great example, I'm glad you highlighted it, of why, these are, short-term trading tools. And really, again, the Nugget and Dust. And then we do have a junior gold miners pair to JNUG and then JDST, pretty much the same tickers, but they are focused, instead of on gold miners, junior gold mining stocks. So those, tend to be a little bit more volatile. Especially we've seen that, throughout this, gold's hitting, all-time highs multiple times this year. And again, as Gianni mentioned, this isn't investing in gold. These are, gold mining equities. But at the end of the day, gold does impact, is their fundamental business. And we've seen with geopolitical events, going on, especially what was, going on in, the Middle East. There was a kind of a flight to safety trade going on this fall, where we saw a strong rally in gold, which also helped benefit the gold miners. And unfortunately, for the top 10 inflows, neither of these made the cut, but they still are, two of our most heavily traded, products across our suite. But I think everybody's been more focused on the tech side, this year and the past couple of years, and the chip side along with the single stock side.
Well, that's actually a great segue into what I have next here, Eliott, because I want to start taking a look at some of these single stock ETFs that Direxion has. So starting off with Apple, okay. Even though we're in the middle of winter, well, I guess technically not in the middle of winter. It sure feels like it here in the Midwest today. But this is a stock that has been ripe for the picking. Apple, a strong uptrend ever since that low in April, been seeing higher highs and higher lows. You had this sideways price action here between June and basically the end of November. I actually traded some of this myself. Got long some shares of Apple. It was actually on Black Friday on the 29th of November, because you broke out from this resistance zone. And once again, what do you see prices testing kind of this like 238, 236 zone once, twice, three times, four times, and it finally broke through on that fifth try. But we see the uptrend, higher highs and higher lows. You have this rectangle formation here. The thing with charting and technical analysis is you could even make an argument that it was a triangle formation, but let's save that debate for another time. Like to new all-time highs in Apple. This is probably good for the overall stock market. Okay, it's hard for me to picture a situation where stocks are about to crash if Apple's making a new all-time high. It just has that weight, that significance, that bearing on the overall market. So Apple to me looking pretty good here, but perhaps a little extended near term. Okay, the stock has pretty much been straight up over the last 5-6 weeks, and so maybe it is due for a pause. So if you are long Apple and you do want to hedge instead of playing the traditional options route to do so, you can pick up some 1x bear side AAPD, the bull side's AAPU, but I think you're going to get the bigger directional moves still with AAPU to the upside, because we still do see that trend of higher highs and higher lows. So any other insights on Apple, Eliott?
Yeah, definitely on Apple. I mean, recent news that came out this week, they reports of them developing a chip for AI, partnering with Broadcom, AVGO. So that's definitely helped drive Apple higher. Along with across the single stock suite, which I know we'll talk about some more later. Just give a high level picture. We've really expanded the suite this year. Actually added some new ones this week, which we'll talk about later. But it's been a very popular and growing way to trade short term, leverage on a single stock like Apple, or take an inverse view or hedge out. We've seen the suite grow from about 1 billion in the beginning of this year to over 6 billion as the popularity in single stock trading ETFs has really picked up. And one thing I'll just say about just the 2x versus the 1x nature in this is that, again, this is a similar scenario to Lambo and Rect, but off of a single stock, where you have the 2x bull side, great way to trade a short-term conviction on a single stock. And then the single inverse side, we see it used in a variety of different ways. So either you're taking a short-term or intermediate term, just inverse view on that stock, or what we've also seen a lot of our institutional clients are using this as if they have, let's say, a concentrated position of Apple within their portfolio. They're looking to take some risk off the table, whether it's around earnings or just kind of the overall market environment, instead of, especially if it's in a taxable account, instead of realizing those capital gains that are probably long-term. A lot of times with, stocks like these, they're able to put on a partial hedge with the single inverse to hedge out some of the concentrated position that they already have on. So just wanted to share that way of a few ways that our traders, retail and institutional, use these type of single stock ETFs.
Very good. Let's take a look at Amazon, because this is another household name that has exploded to new all-time highs over the last couple of weeks. So, we talk a lot about the Magnificent Seven, Apple, Amazon, actually not Netflix. Used to be once upon a time in the FANG, but now it's the Magnificent Seven. Yep. So Apple, Amazon, NVIDIA, Alphabet, Tesla, Microsoft, and Meta. And, a lot of them are pretty much at all-time highs. And that to me is something that you see in a bull market, not a bear market. But you can see here in Amazon, you were kind of chopping around for a few months there, and you broke out from this descending triangle pattern. You can see the resistance zone that we've been, discussing, kind of in that $200 area, that 195, 200. You tested it 1, 2, 3 times, finally broke through. And, what I really liked here is, from a technical standpoint, you rallied to a new high after you broke out. And then what did you do? When resistance breaks, it becomes support. You came back down, formed another higher low right in that former resistance turn support zone. It really is a thing of beauty once you learn to take a look at these types of things. Form the higher low, strengthens the trend, and then just blew to new all-time highs. So I think that this is a stock that, perhaps a little overbought in the near term, but the trend is definitely to the upside at the moment. And until we see any sort of meaningful lower high or lower low, I think you're going to get the bigger moves in the direction of AMZU versus AMZD.
Yeah, no, definitely. And back to the flows. This is, and we have actually quite a handful of our single stock ETFs that are in the top 10 across, again, our entire suite of inflows and, this year. And we saw, Amazon stock hit all-time high yesterday, along with a handful of others. Actually, I saw this in the chat. Someone brought up a great point that I actually am glad they brought up, that I forgot to mention, that using the single inverse side of these, you can use them in a retirement account as one of the few ways to hedge a position in a retirement account, so in a qualified account. So I'm really glad, the person on this brought that up and gave me a good reminder for that. So thank you.
Okay, great. Let's move on here to Alphabet. So this is the stock. I still call it Google. I can't help it. It's when I grew up. It's like Twitter. I'll always call it Twitter, even though it's X now. It's just something that's generational, I guess. But Alphabet dominating the headlines this week. Their Willow quantum trip is really, I think, changing the game in the quantum computing space. So they're able to do calculations that otherwise would have taken dozens and dozens of years in the regular binary computer type of setting. And you can see how the stock really responded well to the news. Wall Street is taking this seriously, guys. I know that all the conversation is on AI, and it's been on AI for the last several months, the last year or so, but I would not sleep on this quantum trend. I think it's still something that's very early. And, what's interesting is that even during this time, Google was dealing with a lot of negative headlines, negative news, antitrust probes. The government's talking about potentially breaking up Alphabet. But let's just kind of walk through what we see on a trend level here. Going into that high into August, it was it was July. It was very clearly in an uptrend. But this is what can happen, guys, is you can have different types of trends across different time horizons. So if you were to zoom out and look at a long-term chart of Alphabet, there's no doubt that it's in an uptrend. But what did you have here? Across the span of 2 months, you had a lower low and a lower high, and then another lower low. But then you rallied back up, you formed a higher low, you formed another higher low, and you finally took out this high back in late October. And so even with all the negative headlines, following these types of time-tested trading principles, I think would have kept you on the right side of this market. And now I think Google, like I said, guys, I don't think this quantum thing should be taken lightly. I wouldn't be surprised to see eventually, Alphabet stock rally up as high as 230, 240 based on this pattern that I'm seeing here. I don't think it's going to be a straight shot because, you had this, borderline parabolic move in a name like this. You have to understand too the size and magnitude of these companies, especially the Magnificent Seven names. The amount of buying that needs to take place to move a stock like this much in such a short period of time really has to be a lot. So I wouldn't be surprised if you saw this go sideways a little bit here near resistance, then eventually continue to the upside. So I'm a big Alphabet bull. I think it looks really strong. I think it bodes well for the overall stock market. And I think we're in the early innings of this story when it comes to quantum chips.
Yeah, no, I completely agree. And I think the headline news, what you mentioned of, the antitrust, the consideration breaking up, Alphabet, the parent company, that's something that, definitely can have a negative impact. But of course, especially with new administrations coming in, stuff like that, you never know what the new administration is going to take, and how they're going to, look on it, relative to, the current administration. So, but very exciting about, what you mentioned, the recent news coming out with them with the quantum computing.
Yeah, I must say I'm most excited to see how those two technologies, AI and quantum computing, can collaborate with each other because, we're not going to get too into that, but I think that's going to be the next big thing in markets. So definitely an eye on. Meta also kind of a stealth outperformer this year. You see clear trend of higher highs and higher lows. Okay, you broke out from this ascending triangle formation, known to be a continuation pattern. And you can see here, once again, look how many times resistance was tested. 1, 2, 3, 4, 5. Finally broke through in the sixth time. Okay, you rallied up. You came back down. And what did you do? You retested that former resistance turn support zone. As you retested that former resistance turn support, you corrected into this descending channel, another continuation pattern, and you blew through that, rallied to new all-time highs. So I'm liking what Meta is got going on here. I know they've been making some major investments, obviously not only in artificial intelligence, but also wearable technology. It seems to be something that Meta is pushing pretty hard. I've been seeing ads for like their headset, circulate around. So we'll see how that picks up in terms of popularity. But from a pure technical standpoint, higher highs and higher lows, the trend is your friend. And the trend is pointing to the upside here on Meta. So anything else you want to add to Meta here, Eliott?
No. Besides the point that they, yesterday all-time high for Meta. Again, we've seen the Magnificent Seven, this year, last year, but especially this year, all push higher. And I know we'll talk about Tesla in a little bit, but even Tesla, where it didn't look like that was going to be the case through almost the first half of the year, has had quite the rebound too. But
yes, okay, let's get to NVIDIA here. So NVIDIA, they're dealing with some antitrust pros over in China, believe it or not. But what do you see here? Higher highs and higher lows. You broke above the resistance zone, okay, in that 128, like 133 area. And you're holding above it right now. So even though NVIDIA has been seeing a bit of sell side action over the last few weeks, it is holding above that former resistance turned support zone. And I actually... I've been trading NVIDIA a bit here. I have a target of 180 on NVIDIA, so something to keep in mind in terms of upside potential. But I'll tell you what, Eliott, if you break this support zone, if you break below this, 130 area, I think NVDD is going to provide a nice way to protect yourself on the downside. So it really is entirely dependent from a technical standpoint on this stock holding this former resistance turn support zone. But I think it can. But what I think and what the market does are often two separate things.
Yeah, no, definitely. And the U.S. looking to curb Chinese companies from sourcing, AI chips, obviously affecting NVIDIA and also just across the chip space. And NVDU, again, in our, I'm people are probably tired of me saying it now, but top 10 inflows for across our entire suite this year. And, there's a reason why. It's one of the, probably best known stocks now, has really emerged as that. Kind of reminds me of, how Apple used to be this way, over 10 years ago. NVIDIA is kind of that new groundbreaking, extremely large company that is just coming out with new technology.
All right, on to Tesla. And I got a couple more after. I know we're running a little short on time here. So this stock really came back to life. It's interesting, I talked about the longer term trends in some of these stocks, and this one really only confirmed its new bull trend just a couple of weeks ago. I mean, for a couple of years there, Tesla was really suffering, but you broke above this triangle, the resistance there. That 270 level was key. You broke above it, came back down, retested it, and it's exploded higher. So from Tesla's standpoint, as long as we're in this channel, guys, I know 420 was a big number for Elon, and we're above that now. So I'm looking at Tesla, probably testing the 460 area. That's actually a stock that I own, and I've been trading it on the bull side since. So that's how I see Tesla, short and sweet, Eliott. Unless there's anything else you wanted to add.
No, I think you're right. Definitely, with the new administration coming in, Elon is part of that. Being head of Doge, which I still think is a very funny acronym for that. Yes. But that being said, definitely some optimism off of just kind of the self-driving, capabilities that they're really pushing, and how the new administration might be a little bit more lenient on that and supportive of that. Yeah, really a momentum, play right now. It's looking like.
All right, this is a new one. Palantir, PLTU, PLTD. I mean, this is a stock that has gone parabolic this year. That's why I just drew this curve like that. Sometimes these names end up being that way, but you can see it had that resistance zone in the 30 area, broke above it, retested it, and it's just been trending higher highs and higher lows ever since. So perhaps a little extended near term. I wouldn't go out and short this, but if you do have a nice gain, if you've been long Palantir, a little bit of hedging with PLTD may not be inappropriate over the next couple of weeks, but I'd be looking for some sideways action here, a new technical base, and then eventually a continuation of that bull trend. So that's how I'm seeing PLTR. I know it's a new fund for you guys.
Yeah, just launched actually yesterday. So we launched two pairs off, Palantir, what we're talking about, and then also off of Berkshire as well, the same format, 2x bull, single inverse bear. And right now, very much momentum, a lot of volatility in Palantir stock. So it's a great short-term trading stock, but also, again, can use these products as a way to trade it short-term.
And last and certainly not least, you had mentioned that new agreement between Apple and Broadcom. I actually really like this setup. Seeing what's called a cup and handle formation. This is a really powerful price pattern that you often see. You have resistance here. You can see, once again, multiple tests. We're on that fourth test of resistance, but the cup and handle, here's the cup, here's the handle. You break above resistance of these patterns. A lot of times you see acceleration to the upside. So I really like Broadcom above like 184, 185. And you're above there, Eliott. I wouldn't be surprised to see this turn into a $240 stock. So that's how I'm watching Broadcom right now. But if you fail at resistance, you can play on the downside with AVS. But if you have some nice conviction on this, I think AVL has some nice opportunities within the context of the bull trend.
Yep, no, definitely. And we launched this pair about 2 months ago now with a handful of others. So starting to pick up steam, seeing more trading within the ETFs, and now it's very exciting.
All right, well, that takes me to the end of the charts that I wanted to cover here. So I just want to remind viewers that leverage is either your best friend or your worst enemy. You cannot afford to stay wrong for long. You need to know your risk, your time horizon, and your plan. And I just want to remind you that these leveraged ETFs are for either day trading or swing trading, which means you're holding it for a couple of days. And if you really are seeing a big move, maybe a week or two max. But trade sizing, you can afford to be wrong more than 50% and still be a profitable trader. There's a lot of resources online to understand that very important principle in greater detail. But at the end of the day, know how much you're willing to risk in terms of return. And if you enjoyed what we went through today, we can stay connected. I should put X, but like I said, I'm always going to call it Twitter, Gianni_DePoche. So I don't know if we have time for questions. I think we had a stop at noon. So if there's anything else that you wanted to cover before we wrap it up here, Eliott, let's do it.
Yeah, no, definitely. I just wanted to mention, like you said, also on Direction's website, Direxion.com. If you want to learn more about leverage and inverse ETFs, how they work, daily rebalance, kind of why they're short term, we have some great education, literature, short overview videos, as well as some short reading material. So just want to throw that out there if anybody wants to learn more about how leverage and inverse ETFs work mechanically.
Awesome. Well, thanks a bunch, Eliott. And I always enjoy going through these charts and seeing what's happening on your end too. So I appreciate the time.
Yeah, Gianni, it was great being on with you today. And thank you, Benzinga. And I hope you have happy holidays and, looking forward to next time.
Likewise. All right. Talk soon.
Sounds great.